Good morning, traders. Welcome to the live stream. My name is Charles Gough. I come from a community called Pirate Traders, where we are focused on the ES, the NQ, and how they move through the two-way auction process. I'm going to be using the software that you see on the screen to make predictions about what the market can do today. The chart on the right over here is a bookmap chart. This is an order flow chart, so it basically allows us to see how liquidity enters and exits the market. I also have something on here called the stops and iceberg setting. And those stops and icebergs let me understand what kind of business is happening and who the participants are. So if you see this little symbol pop up that has the two little triangles, that is an iceberg. That is a sign of either an algorithm, a machine that is trying to hide the amount of orders that it is going to fill at a particular level, or it is a larger player who is trying to either accumulate a position or take profits on a position, and they want to hide the size of their order. They will use icebergs. So when you see those icebergs, that's what that is. And then you may occasionally see a symbol with a little dot and some numbers next to that. That is a stop. So we know large orders are getting stopped out at a particular level. If you look at the orange and yellow lines that you see over here in the current order book, so this little white line that's running right here, everything to the right of it is the current order book. So that's where orders are sitting right at this moment. And to the left, you can see how it changes over time. And you can zoom in and zoom out to see, you know, down to the microsecond, how things are changing with the order book. And then the screen over here on the left is a market profile chart. This is very similar to a candlestick chart. It is just showing you the actual price action. So where does the market go? That's what a candlestick chart will show you. And how much volume does it bring in? A candlestick chart will show you over a certain amount of time how much volume is brought in, but market profile shows you where on the y-axis the volume is brought in. So where do they spend the most time? Where do they bring in the most volume? This gives us an enormous edge on being able to predict what comes next in the market, because we have the clearest understanding of what is currently happening in the market. So when we look at the market profile chart over here on the left, we know where people are likely to do business. We know where the support and resistance levels are. We know where there's likely to be sweeps of the order book. We know where the market is likely to reverse, or if it can break above a certain level, it's likely to continue, or break below a certain level, it's likely to continue. We see all of that information from the market profile, and then we take the information we're getting from the bookmap chart to kind of correspond when we get to those levels and get a better idea of what's taking place there so that we can predict what comes next. The most important thing that I like to watch on this bookmap chart is when things change. So, right now they have these things called bracket bots, which they run during the overnights. Fortunately, they, a few months ago, started turning these off during the day. So it's much less distracting. If you have Bookmap, you can also filter it using Bookmap Pro or Bookmap Lite. You can use that to filter those out. But fortunately, they turn them off now during the regular trading hours. So these will disappear, probably just before 9:30. And we'll talk about it when we see it happen. And then it'll be much clearer to read what's happening with the order flow. But when things randomly change with the order flow, when there's a big node of liquidity somewhere and then that disappears, or there's really no liquidity somewhere and suddenly a big node appears, that is the moment something is likely to change with the market. And so if I'm predicting that the market is going to find support at the previous day's high and go make new all-time highs, and then all of a sudden I see a ton of liquidity piling up, above it, what do I know? Well, they're probably trying to scare price away first, but then later on they're going to come back up for that liquidity. Okay, so maybe I do want to look to get long, but I don't want to get long right this minute because the order flow is telling me what's about to come next. Okay, so as we go through the stream this morning, I will be doing my best to point out these things and explain, what they are and what they mean. If you have any questions, please jump in the chat and let me know. Because a lot of times I talk about these things every single day. I have a community called the Pirate Traders Brigade where I live stream like this every morning. And so a lot of times I just assume everyone that's watching already knows what I'm talking about. They already have heard me say these things a million times before. So if you're new here and you don't understand, please ask questions in the chat. If you're watching on the YouTube channel, first and foremost, let's smash that like. Bow, 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 bow. Boo, 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 boo. Let's get that like button smashed. Let's get some thumbs up going here. But also leave your comments in the YouTube chat and I will do my best to keep up with those and answer them as they pop up. If you're watching this from the Discord, from Bookmap's Discord, there is a tab, if you go up a little bit, that says Futures-Charles. If you leave your questions in there, I will answer them a few minutes later in the live stream. Okay, so please let me know if you have any questions. There is no dumb questions. If they're really dumb, I just won't respond to them, but ask away. Okay. Now, your first question is, Charles, what do you think is going to happen today? Do you think the market's going to go up? Do you think it's going to go down? Do you think it's going to go sideways? Do you feel confident that you know for sure what's going to happen? Or is this one of those days where you just have to guess? This is one of those days where I feel like I understand what the market is going to do, but I don't feel super confident about it. Let me take a second to just explain why. So we're going to start with what we call the top-down approach. That is going out to a wider time frame to give us context and then zooming in to the smaller time frame. So on a monthly time frame, there's no reason to be bearish here. The market is one time framing higher. We are making higher highs and higher lows each month, and that is still continuing into this month. There's no reason to think the market has to stop and come back down right now. When we zoom in a little bit and we look at the weekly, we see that we had a lot of momentum on the weekly time frame, moving through the previous all-time highs. But then we had to spend some time going sideways. We had to have a little bit of a balance here. Well, we are now on the upper end of last week's range. So if the balance needs to continue, we're likely to come back down to the weekly lows from last week. If the balance is over and we're ready to start momentum again, we're likely to get a move the size of last week's candle to the upside. So that would mean a pretty big move to the upside this week. Okay. Now let's zoom in a little bit more and we'll take a look at the daily. Okay. So when we look at the daily chart, what do we see? Well, this is what we call a balance area. This is a range where the market was stuck going up and down and up and down and up and down inside a range. And you can visualize that by this blue box. Okay. The way it works with balance areas is you will stay in balance until the market is ready to break out and make its next move. Now, you never know when the market is ready to make its next move. Here, you might have thought the market was going to continue much lower. Here, you might have thought the market was going to continue much higher. But once you see that it can't, you know you're heading back to the opposite end. Okay? Well, we got below, got some good access to the downside, reversed back up, and now we are breaking out of balance. Why am I predicting that this time we're going to break out and not fail and come back down like we have the last 3 times that we got up here? Well, because Friday's range is what we call a back test of the breakout. So just look at this blue box. I've had this drawn here for weeks. Okay. On Thursday, the market broke out of this box. It got above the high. The previous time it did that, what did it do the next day? It came down, right? Each time it got above the blue box, it came back down the next day or that same day. What did it do on Friday? It got above the box, it came back down, and it found support. It didn't need to rotate to the opposite end. So that increases the odds that the market is breaking out of balance. Okay, it increases the odds that we are now about to start this week a move higher to the upside. Now, there's one thing that's tricky about a breakout of balance, and that is that the market often loves to chop and grind right on that balance area high. It is not common that you literally poke out, back test, and then immediately just go straight like that. It does happen sometimes like that. But a lot of times the market loves to just sit here and spend time going sideways, getting as many people long and short as they can before they make whatever the eventual move is they're going to make. Okay? So now that we've got all of that context for understanding what the market is doing, let's zoom in and let's look at the market profile chart from Friday, and we'll understand why this is a little bit of a complicated morning. So we got that breakout on Thursday. The market made that breakout and it closed up at the upper end of the range. It made a new all-time high in the overnight, making that weak, increasing the odds we have to go through it at some point in the regular trading hours. But then on Friday, we opened right next to that all-time high. We opened with a gap up. So we had momentum. We had a reason for the market to keep going. It should have just filled the gap and gone, right? But that's not what it did. It filled the gap. It came crashing right back down to that balance area high that we've been talking about. And then what did it do the rest of the afternoon? It just went sideways. So I'm going to expand out this profile for you so you can see each 30-minute time frame, how it moved. Look at this. Filled the gap, spent some time grinding around in here, trying to get people into trades, liquidated back into the previous day's range. Okay, one little bounce, and then boom, we're back at the balance area high. And then from there, what did the market do? From, let's say, the G period low right here, what did the market do? Nothing. It just went sideways all day long, all day. Oh yeah, all day long. Okay. So that is a sign that the market is balancing on the balance area high. It's grinding and chopping and grinding and chopping and trying to get as many people long and short as it possibly can right there. So let's take that context and say, what is going to happen the next day? Well, let's pretend we can't see the overnight range. That tells us that the market probably needs another dip into the balance area, right? It probably needs to come back below 63.22, sweep the order books there, take out a bunch of stops, then it can turn around and go higher. Okay. So that B-shaped profile that we left behind on Friday was actually bearish because it was a sign we needed one more poke to the downside. Well, now we have the context of the weekend and the way the market traded over the weekend. And again, looking at it in terms of where did it spend the most time? Where did it bring in the most volume? That's what we're focused on, right? Well, where did they spend the most time? Above the bottom of that B, right? They turned what was resistance in the afternoon on Friday into support over the weekend. Anytime you turn resistance into support, it is bullish. Okay. So now the market on Friday was saying we probably needed one more dip, one more little poke to the upside. But over the weekend, they were like, no, we don't need it. We don't need to dip. We don't need to poke down. We're bringing in buyers up here. Okay. But where did the overnight run out of steam? Right at Friday's high. See that? You see how it's tapering off? Less and less time. Less and less volume the closer it gets to Friday's high. What is that telling us? That we also don't have an appetite to go higher yet. So this is going to sound confusing, but the overnight market is telling us we don't need to go down. We also don't need to go up. When we combined all of that information with the fact that we know the market loves to go sideways, right on a balance area high. It loves to just poke through and screw with us as much as possible. That tells us that this morning we have to be open to any of these scenarios happening. We could go sideways, we could go down, or we could go up. Now, using my experience, my years of trading with the profile and Bookmap, my guess is we're going to go higher today. I think the market is going to make new all-time highs. I'm not saying it's going to be fireworks. I'm not saying we're going to have some massive, humongous move, but I do think we're going to get above 63.57. However, I don't think it's going to happen right away. I think probably we're going to spend a majority of the day today just grinding around inside yesterday's range, inside Friday's range. It's probably going to look like it's about to break higher. Everyone's going to get long. Oh my God, I'm going to miss it. I got to get long. And then whoosh, it's going to come back down again. And then, oh my God, it's going to crash and burn. I got to get short. And then whoosh, it's going to come back up again. I feel like it is going to be one of those days. Okay. Now, if we get new buying up here around yesterday's high, 63.53, if the market works its way up there and we see this happen, previous resistance starts to become, so here we have resistance in the overnight from Thursday night of last week, resistance in the regular trading hours on Friday, resistance in the overnight over the weekend, this weekend. So if today we can get up there and we can start to turn that into support, that is a reason to be very, very bullish. Okay, that is a reason to assume the market is about to make a big move to the upside. When we start thinking about breaking out of balance, the highest probability, or what I would say is basically a guarantee, is that you will get a move at least the size of the balance area. Now, that doesn't mean that's where it has to stop. It could keep going much further than that. But if we can get new buying above Friday's high, targeting a move towards 63.85 is very, very high probability, even for today or, tomorrow or Wednesday at the latest. So that's very bullish. If we get new buying up there above Friday's high, we want to become bulls real quick. We don't want to wait around. In that same regard, if we get below Friday's low, if we get below 63.23 and we start to get new selling down there, that is extremely bearish, okay? Because that is a sign that the market is back in balance and we know what happens when it fails. We know what happens when it gets above this blue line and it can't stay above it. It heads right back down. That's what it does. And that exact same thing could happen if the market gets back in balance and starts to get new selling in there. It's going to head back down to that balance area low. So there is a lot of opportunities for the longs above Friday's high and a lot of opportunities for the shorts below Friday's low, but it will require patience until we get to one of those levels, because we know the way the market is likely to move today is in a way that will be very frustrating. In a way that will be very choppy, very sideways. It'll look like it's about to break higher, and then out of nowhere, it'll come back down, and vice versa. We are prepared before the opening bell even rings for that as the likely way the market is going to trade today. So we certainly do not want to get stuck in trades if we already know that. We don't want to buy highs. We don't want to sell lows. We want to wait for the market to come back into support to enter long trades. We want to wait for the market to push back into resistance to enter shorts. We don't want to fall in love with trades. We want to move our stop as quickly as possible. We want to take profits as quickly as possible. We want to be psychologically prepared for the frustration that is going to come with a choppy sideways day where the market is really hard to read. If we come into the day this morning, 9 minutes before the opening bell rings, and we are prepared for all of this, there is no reason why we should get trapped in trades today. There is no reason why we should get overwhelmed or frustrated with the market doing a sideways move, because we are prepared for it ahead of time. That is our edge. I can't predict which of these scenarios is going to happen today. I can't predict if we're going to spend the whole day inside yesterday's range and go nowhere. I can't predict if we're going to go higher or we're going to go lower, but I can know what to look for at what levels. Okay? And I can know how to handle when we're stuck in between those levels and we're chopping around. I can know how to handle my trading. That is the edge. The edge is not predicting the future. The edge is managing our emotions and our trades in the moment, setting us up for whatever is the highest probability thing to happen in the future. Any questions on any of that from the chat? Any questions? Good morning to Billy K, Arjit in the house, Sniper Trader. Jason W says, smash that like button for the captain. Or walk the plank, as they say. That's what they say. Mark, good morning to you. Danny G in the house. Jay is here. Good morning, Pirates. Happy Casino Monday. Every Monday is Casino Monday in the market. Okay, so this is what we talked about with those bracket bots. Here we go. 7 minutes before the market opened, pew, 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 they powered them down. So whatever sort of game these market makers are playing to try to manipulate the overnight market, they've turned off those bots. So now from this point on, reading liquidity should get a lot easier during the regular trading hours. Yeah. Good morning to Trevor, Laura, Sheena, Rich, Grizzly Bull. Grizzly Bull hit the like button. Did you? I mean, that's the question. Ashwin, good morning to you. Esile, he says, can we look at gold? We can take a look at gold. I think gold's been kind of boring, but we'll take a look and see if something's happening. Yeah, it could potentially get interesting. Okay, so this is like balance inside of balance inside of balance. Okay, so recognize that everything is a little bit harder to read in these types of scenarios, but what you've got here is a channel for gold. Okay, and you're now likely heading to the upper end of that channel. So you could draw a trend line basically from, move this out of the way, basically from the highs of June 26th to July 3rd. You could draw a trend line there, target that as the move to the upside. You could draw the trend line from July 23rd to July 14th, which you're pretty much poking into now, but that's your potential targets to the upside. Okay, something that looks like that. What happens when you get there is where things get interesting. So if gold pokes up into one of those trend lines and then reverses and starts coming back down, guess where you're going? The lower end of that channel. If it pokes through, then you can start to look for all-time highs on gold. Okay. So for today, I would say it looks a little bullish. It looks like it's on its path to the upper end of balance. And so that is bullish to see. But it's what happens when it gets there. If you wanted to use horizontal balance, you could look at something like, that right there as a target to the upside. Okay. So short-term targets are probably somewhere in the ballpark of like 3409. Slightly longer-term targets are in the ballpark of 3448. And if you don't fail at either one of those levels, the target is 3509. Okay, to the upside. Looks good. Looks like it wants to make a move. The question is, once it does, can it sustain that move? Global trading in the house. Good morning to you. River Rock is here. River Rock says, not today, most likely on Wednesday. I'm not sure what you're responding to, but I hope it isn't the make new all-time highs. Because that would be very annoying. And why do you pick Wednesday? Do tell. Suzanne is here. Good morning to you. Tim in the house. Alan is here. And Willie T. Good morning to you. We got 3 minutes until the market opens. If you guys have any questions, let me know. Otherwise, there's not much else analysis for me to do. So what I mainly focus on once the market opens is this area right here around 63, 36 to 39. That was, as we discussed, previous resistance that became support. So can that hold as support this morning? I would describe myself as relatively bullish as long as we're above it, assuming we're going to get new all-time highs today. Not right away, not first thing when the opening bell rings, but today before the close. Okay. As long as that support area holds. If that breaks, I would look to come down and test 63.29. If that doesn't reverse the market, 63.23. Okay. resistance wise, I'm looking at this area around Friday's high. So I would say, 63.50 to 63.53. And it's the same thing in reverse. I assume that that's going to be resistance and it's going to smack us back down this morning. If we get through it, seeing it become support would be beautiful for a big move up. So those are the levels I'm watching. That is my chop zone this morning. And I just got to wait and see what happens in relation to that chop zone. Which way do they break? If they get to the upper end of the zone, do they just look above it and fail? Well, then great. They're heading back down. When they get to the lower end of the zone, do they just look below and fail? Well, then great. They're heading back up. Or new buying is bullish. New selling is bearish. Because it's a chop zone, which we just always have on Mondays. River Rock says IBM earnings. Yeah, there is earnings this week. DNK, good morning to you. Banana says, good morning. How can you tell if it's buyers or sellers that are coming in on Bookmap? Okay, so with Bookmap, the way that you can tell if it's buyers or sellers is you would have to literally watch what's happening on the bid-ask spread at that particular moment. Okay, so you can see it visually by looking at these, either the size of the candlesticks over here or the numbers, just the hard out numbers. Are there larger numbers coming in below price or are there larger numbers above price, right? So if you see this isn't that big of a difference right now, but let's say there were 80 above and 200 below, there's more buyers in that market. And so the market is likely to hold support and continue higher and vice versa. The other way you can see buyers and sellers is by just looking at how price got to a level and then what happens next. So if price goes from where it opened right now at 63.45, okay? If it goes up and gets above yesterday's high at 63.53, there had to have been more buyers in the market for the market to have gone up instead of down. If there were more sellers, it would have gone down. So when you get there, you have more buyers, right? So then you say, what happens when we get there? If price stays up there, it has to be more buyers. Because if you pushed up there and then there were not more buyers, you would turn around and come back down. So often the best way to recognize whether there are more buyers or sellers in the market is how did the market get to the level it's at? And then what is happening now? If you push down to a level and you stay down and you can't come back up, that's more people going short and more people going short and more people going short. Because if you push down to a level and then just, let's say shorts just stop trading, automatically the market's going to go back up, right? So to stay down, you need more shorts and more shorts and more shorts entering the market. If that's what happens, if say you push to the previous day's high and you get more longs and more longs and more longs, eventually the price is going to go higher because that's how it works. When there are more people going long, price goes up. When there are more people going short, price goes down. Okay. There's also a tool that we use called the ticks. It is not a tick chart, but the tick chart, ticker symbol TICK. And this is basically measuring the number of stocks in the NYSE that are going up a tick and subtracts the number of stocks in the NYSE that are going down a tick. So just in general, if the ticks are going up, more stocks are going up. If more stocks are going up, what are the indices probably going to do? They're also going to go up, right? If the indices go up, what are the futures going to do? They're also going to go up because everything is arbitraged together. So another way that you could look at that is once the market gets to a level where you want to know if it's new buying or not, look at the ticks right at that moment and ask yourself, are they going up or down? And then you'll know if there's new buying or not. One really great part about Bookmap that I absolutely love about this software is the stops and icebergs setting, because it may look like new buying, but then you look at these settings and you realize it's not. For example, if the market pokes above the overnight high or the previous day's high, and then it starts to make a move, bop, 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 and then you look over and you see it's just stops. They were taking out stops the whole way up. Well, that's not new buying. It is technically orders going long, right? It is technically long liquidity, but it is old business exiting trades rather than new business entering trades. And that's a different thing. If they poke up above there and all they do is take out stops, they don't bring in new business, new buyers up there, guess what they're going to do? They're going to turn around and come back down. Okay? So being able to see when it stops that are taking out the market, that is a little bit of an edge because you know that momentum is not, you can't trust it. So from the point where it takes out stops, you either want to see it go sideways at higher prices for a while, then you can trust it because they're spending time bringing in new buyers, or you can wait for it to dip back down into support, then you can trust it because people are buying the dip. But you don't want to chase the price when they're just sweeping the order books, when they're just taking out stops. The same thing with these icebergs. If you see a market push up to a level, let's say it pushes up to the previous day's high, it starts going sideways. Every indication is telling you we're bringing in new buyers. Yay! The market's going to the moon. But then you see there's an iceberg going short and an iceberg going long and an iceberg going short and an iceberg going long. Well, then you say to yourself, yes, this is new buying. Yes, I can go long. But in a trade like this, I want to have a much tighter stop because I know it's shenanigans. I know it's just some high frequency bot trying to make it look like we have support above the previous day's high because they plan to flush the market in a few minutes. So that's okay. I can get long. There's nothing to say don't go long if you have support, but it's just I want to have a tighter stop. I want to lose less if this thing sweeps back down because that's likely to happen if all they're doing is artificially holding price up there. So if there was a simple answer to just say, this is more buying, this is more selling, everyone on earth would use that and everybody would be a profitable trader. It is complicated because there's a lot of mixed signals. There's a lot of times where it's confusing as to whether or not this is actually new buying. And so we have to use all these little hints that we have, all these little pieces of information that we can collect from the market profile, from the bookmap, and from the market internals to give us an idea of which of these things is happening. You don't have to go long every time the market has new buying at the previous day's high. You don't always have to buy it. But if all the stars are aligning, if the ticks are going up, if you don't see some icebergs, if it all seems like it's real, then you go long. And that trade setup will work out way more often because you have those extra pieces of information rather than just always buying it because it's above the previous day's high, if that makes sense. So we are still inside the chop zone. This is an area where we're starting to look for resistance here for the market to run out of steam between 63.50 and 63.53 and come back down. I cannot guess if it will or not. I cannot tell you right now it's going to reverse and come back down. That would be guessing. I don't do that. All I can tell you is this is the area where it should find resistance. We found resistance on Thursday night. We found it on Friday. We found it over the weekend. So this is where sellers have been stepping in. If they do step in today, we should come back through the opening price, come back through 63.45. If we don't, if we come back and we don't come through the opening price, that's bullish. It's a sign of new buying. If we don't get resistance and we just immediately push higher, that's bullish. It's a sign of new buying. If we reverse and come back down through the opening price, it is not bearish. It is just a sign we're still in the chop zone. It's called a chop zone because they chop it up. So that's what we're looking for now. To resist or not to resist, the market will tell us. I'm also making note of this new liquidity up here around 63.58 that has just joined the party. What is this liquidity trying to do? It's one of two things. It is either trying to act as a magnet that will pull price up there, or at least towards it, or it is trying to scare price away. It's trying to say, don't bother going long at 63.50 because you're not even going to make it past, 58. So it's not even worth your trouble. So which of those two it is based on what the market does right now. Does it continue towards it or does it start to push away? If it starts to push away, we will assume the market is going to come back down through the opening price as long as this liquidity stays here. And if that randomly disappears, we assume the market's going to come right back up. If it pulls the price to it, we assume the market is going to continue higher until it either gets to 63, 68, or they disappear that liquidity. So is it a positive magnet or a negative magnet? We'll find out right here, right now. The market is still at the same place it was when that magnet was put on, so we don't know yet, but we will in just a few moments. Inside the chop zone, where they will chop it up. Walk, 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 wow. Sook in the house, good morning to you. TCH, good morning from France. Bonjour. I think we have some other French in here. CK, good afternoon. He says, good afternoon, France. Love from Sweden. I don't know how to say good morning in Swedish. Crypto Writer in the house, good morning to you. DNK says, he thinks we're going to test the overnight high first at the market open. He messaged this before the open, but got stopped because of the chat delay. Okay. Well, it looks like you're right. It looks like the first move from the open is going to be to that overnight high. Can you tell us what comes next? Are we reversing and coming back down through the open, or are we getting that new buying and going to the all-time high? Sook says the tick is coming down while price is going up. Any explanation? Yeah, that means that the ticks are cooling off and they don't need a pullback to do it. That is bullish to see. So anytime you see, the ticks doing the opposite of price, so price is going up while ticks are going down, don't worry about the ticks. They're just trying to get back to the zero line. This basically just means people that were short, like from up here in the overnight, are getting out of their shorts. So them exiting their shorts is the same thing as a long, right? It pushes the market up, but it doesn't indicate new buying yet. Okay, so once the ticks get back to the zero line, that means that we will have dealt with most of the overnight inventory. And so at that point, we can figure out what comes next. And the ticks will probably get to the zero line right when we get to the previous day's high. So that'll be a great place to figure out, is it new buying and continuation higher, or is it a failure back down? The ticks can be tricky first thing in the morning for the first 30 minutes. They often send a few mixed signals, particularly if they open way overbought or way oversold. You kind of need to just ignore them for a little bit. Honestly, anytime you're in a chop zone, they're really not as helpful. In the chop zone, the most helpful thing is price action and Bookmap and how the stops and icebergs are working and how the liquidity is changing. Okay, so as of now, this liquidity that we were just talking about up here around 63.58 is acting as a magnet to pull price to it. So that does increase the odds we're going to get above yesterday's high. We've also entered the area where we're expecting to see resistance, and we're not seeing any yet. So that is also bullish to see. Not bullish enough to go long at the high when I'm expecting the market to be choppy, but it is a first bullish signal to carry forward for the next moment. So if you look at this node of liquidity above, it's getting darker and darker and darker. They're adding more and more liquidity to it, and price is pulling towards it. And then it starts to get lighter and lighter and lighter. And then what does the price start to do? It starts to work its way away from it. So this is the magnet that the market is paying attention to right now. If they disappear this, if this just suddenly disappears, the market's going to reverse right back down. As long as that liquidity is still there, though, the market is likely to poke up and try to get to 58. Suzanne says, what is the pink square on the Bookmap chart? The pink square. You're talking about on the market profile chart. So this chart over here on the left, basically what you're looking at are profiles. So this is a profile for Friday's regular trading hours. This is a profile for the weekend. And then this is a profile for today's regular trading hours. Okay, so where you see the red, those are the areas where the top 30% of volume, the highest 30% of volume traded. The pink is the middle 40% of volume, and the white is the bottom 30% of the volume. Well, guys, I was right about us making new all-time highs today. I was wrong when I said I don't think it's going to happen immediately. Of course, Charles, it happened immediately. Oh, market. Okay, so we talked about this node of liquidity and how that is acting as a magnet. We're there right now. So either they really fill those shorts or it magically disappears right when price pokes into it. If it magically disappears, we're probably going to come back down. If they actually fill those sell orders, we'll probably continue higher. And I know that seems contradictory, but that's just the way it works. The market was going to the liquidity, so it's what happens when it gets there that decides what comes next. So they let a little bit of it fill. You can see they didn't quite disappear it fast enough. The first push of the ask into it was able to fill a little bit of that order. But they obviously didn't fill the size that they had sitting there to fill. So that increases the odds we're coming back down to test Friday's high right here around 63.53. If that holds as support, I am bullish for the rest of the day. Okay. That this thing can just keep going to the upside. Why do I say that? Because of the breakout of balance and the back test that we talked about this morning, right? We broke out of the balance area. We came back and back tested it. If they can hold this support at Friday's high, that is the sign that they have the momentum, meaning we are not in balance. We are in momentum, and that momentum is to the upside, meaning price is likely to continue to the upside. So as long as we stay above yesterday's high, I will remain bullish. If we fail and pull back into yesterday's range, it's not a reason to get bearish yet, but it is a sign that we will need to come back and test the support around 63.49. So either they hold 63.53 or they hold 63.49. Let's see what happens. Blue skies smiling at me. Hey, nothing but blue skies do I see. Ba-da-ba-ba, blue skies. So you're saying to me, you're saying, Charles, we're at the high. I'm not long. What do I do? Should I short for the pullback? No, you don't fight momentum. You never, ever fight momentum. Okay, well, I can't go short. Should I go long at the high? No. Why? Because so far, this move just took out stops. Okay, this is not new buying yet. This is chasing price and then stopping out a bunch of orders. That makes it look like we got a bunch of new buying here. So for this to keep going up and up and up, they need to keep taking out more stops and more stops and more stops, which they absolutely can do. But we're going to be watching the stops indicator here on Bookmap to tell us if that's happening. If the next poke up, let's say they get to 63, 62, and they don't take out a bunch of stops, then it's going to need to come back down. So do you really want to be going long at 63.60 if it might get up to 63.62 and then reverse and come back down? Probably not, right? Not unless you're a very fast scalper. So the better move right now is still just to be patient and wait for the market to come back to Friday's high and look for support there. Even if it feels like you should chase price up, don't chase it. They're just taking out stops. Blue skies smiling at me. Hey, nothing but blue skies do I see. We also see that they are playing this game with the liquidity where they are continuing to move it higher. So when they disappeared this one here, let me change the color so you can see. When they disappeared this one here, what did they do? Immediately started to pile it on up here. When they disappeared this one here, what did they do? Immediately started to pile it on up here. So they are trying to get this magnet to convince people to keep buying. Now, maybe they're doing it as a favor to the buyers. Maybe they're making it easy for you to get long up here because it's going to go up all day. Or maybe they're just trying to get as many people long as they can at the previous day's high for the flush. So this is why you wait for a pullback. You wait to see support, then you buy. Blue skies smiling at us. Nothing but blue skies is a must. Ticks are saying we are getting new buying up here. That's bullish. One more poke on up. Can they take out stops with the poke on up? Oh, yeah. JTT says, do we ever look at the NQ? Yes, we can do that just for you. Yep, same story. NQ, very bullish here. Yeah, so I feel exactly the same way about the NQ that I feel about the ES. If we're talking about over the next 10 minutes, I think they're going to get another poke up. Okay? But they need to come back down to this area around the previous day's high. I would say at the very least, they need to come back down to like 23,330. Boy, that's a mouthful. 23,330. I think they do need to come back down here to this area between like 23,330 and 23,310. Okay. They need to come back in there and test that for support. It is worth noting that the NQ's opening price is the low of the day. That is very, very rare to see. Okay. So that is not to say the NQ can't keep going higher all day. It is just to say there is now a magnet on NQ's low. What do I mean by a magnet? I mean literally everyone that has been long so far this morning, that's where they're going to have their stops down there. Okay, I mean, they may have their stops inside the range, but I'm saying if they're picking a level where they're like, you know, I want to have a high probability my stop won't be taken out, their stops are down there at that low because it never came down below it. So if they went long a minute into the day, that was where their stops were. If they went into the long 10 minutes into the day, that's where their stops were, and so on and so forth. And so when you have a giant magnet like that on price, you want to be cautious going long near the highs because you know the market needs to dip. Now, it doesn't have to come back through the opening price, but I'm just saying it can't go straight up forever. And so if you've got a magnet down there until you get a decent pullback, like one back to the previous day's high, it's hard to trust the momentum up. Right now, they're just poking up to take out more stops. So they can absolutely get another poke. But you just want to be cautious. If you're long, you want to move your stop above your entry as soon as you can. So they're really trying to keep pulling this price up. Look at that liquidity above. It's getting darker and darker and darker. You see that? The colors are getting darker and darker over time. They did not want this market to reverse right now. They really want to get it up. They're able to take out more stops. So that means this momentum can continue. I would say the potential support at 63.58 is now buyable. So they come back down into this. It is buyable for continuation to the upside as long as this liquidity stays here, but very tight stops on this trade because you can't really trust the momentum until they come back to the previous day's high. But it looks like it's working. They're taking out stops. They're bringing in a few new buyers and they're able to take out more stops. Well, they'll keep doing that as long as it keeps working. Also, if you're a bull, you want to see them keep adding this liquidity as they have been. They get to the level, they immediately add it higher. They get to the level, they immediately add it higher. They get to the level, they immediately add it higher. You want to see them keep doing that up here. You want to see them keep adding that liquidity higher. What you don't want to see all of a sudden is big, huge nodes of liquidity start to build below price. Here it comes to save the day, a little liquidity. So the question in my mind, can they turn 63.58 into support? RP says, on a pullback, are we looking in Bookmap for absorption or a stop sweep? So absorption. What you want to see, if you've got the volume dots, I don't generally use them because I like to visually see right where the bid and the ask spread bounce off of the nodes of liquidity. I like to be like super granular and see in there. And when you have those big dots, sometimes it kind of blocks the way. But if you have those volume dots, yes. If you start to see absorption, that's support. And that you can trust for the next move to the upside. I will just say everything this morning so far is very, very mechanical. Okay? They are trying to convince everyone to go long, to chase price up. You can see it in Bookmap with how exact these liquidity changes are. As soon as they disappear one, they add another. Look at the liquidity below, stair-stepping its way up with price. Do you see that? Icebergs. Every reversal has been an iceberg reversing it so far today. So they are playing the game of poking up to keep taking out stops. Whenever they've magically done that, whenever they've taken out the last of the stops to be taken out to the upside, it's going to completely reverse itself. So keep that in mind. Nothing wrong with going long. Just don't fall in love with the trade. As we look at the stops indicator, we can see each poke, they are still able to take out stops. They took out 338 with the first poke. They took out 148 with the second poke. They took out 96 with the third poke. So they're going to keep poking as long as it keeps working. But there's less and less stops to take out each time. $63.69 is another level I was looking at for a reversal today. So I'll be watching to see if that becomes resistance. Just because 63.70 is a major level for options. All right, so that is the final profit target to the upside from the Brigade email this morning. That doesn't mean the market can't keep going. It just means if you're long, this is a great place to lock in profits. The important thing that traders need to understand about those levels that I put into the email every morning that I send out to the Brigade is that those are targets that have a high probability of being reached if the market has momentum. So the upside targets are levels that if the market has momentum up, it is very, very likely that it will at least get to those levels. That doesn't mean the market has to stop at those levels. It doesn't mean it can't keep going way past them. It's just, I want to give you targets where you have a good chance of being able to take profits. So if you'd have gotten long at some point today and the last upside target is 63.69, that's a place where you would take profits. Doesn't mean the market can't keep going, but it's just if you want a high probability of being able to lock in your gains, that's a place to look. If you are not a member of the Brigade, you might consider joining. You can sign up. There's a link at the top of the screen. You can see piratetraders.io/join. It's $20 a month. If you went long any point today, you could have paid that $20. $20 is less than 2 ticks on the ES. Okay. So in a day, you can pay for your whole month. In a week, you can pay for your whole year. The Brigade membership absolutely pays for itself. I do these live streams every morning where I guide people live like this for the first hour of the trading day. I also send out an email every day with my outline of what the market is going to do. Today, I was right in saying that the market was going to make new all-time highs. I was wrong in saying I thought it was going to be a choppy trip to get there. And instead, we've gone in a straight line. But that's what the live stream is for, is that I can then adjust to that moving forward. So how have I changed my mind from the open to now? Well, if we'd have spent the first chunk of the morning grinding around inside the overnight range, if we'd have just done a dance in here for a while and then we broke higher, I would assume we could keep going higher all day long. I would assume this thing could just trend and trend and trend and trend to the upside. But since we opened and went in a straight line, I do not think that is possible anymore. I don't think we made the high quite yet, but I think we're going to very soon. Please don't ask me to predict the exact level or the exact moment where the market will make the high for the day. That I cannot do. But I can predict to you that both the ES and the NQ are going too far, too fast, meaning they need to come back down. Now, they don't have to do it right this minute, but at some point they're going to make a poke up and they're not going to take out any stops. Okay? Maybe the next poke will be the one. And if they don't take out the stops, that will likely be the high of the day. And the market will come back down towards yesterday's high. Okay? Come back down towards 63.53. If the market comes back down and finds support, the party has begun and we're looking for momentum once again. But it needs that pullback. It is going too far, too fast. Markets almost never, I mean, I'm not saying never as in it's never ever happened, but it's like 1% of the time where a market opens and then just goes straight up all day long. It is very, very rare. And it is often because of a major change in the options market. You know, a window of weakness or something like that opens and that causes these types of things, or some sort of fundamental news thing has caused it. You know, we just got great news. You know, such and such a company made great earnings or whatever. You can get days where the market just, you know, cranks higher and higher and higher all day, but it is very, very rare. Okay. So the idea that this market is just going to keep going all day long to me seems very unlikely at this point. My guess is one more poke to the upside, and then it runs out of steam and comes back to the previous day's high. Don't get mad at me if I'm wrong, but that's what I think. Remember that expression, the market goes too far, too fast. It is a very real thing. And the reason that it happens the way it happens is because everyone chases price. People that weren't willing to go long right here, they start to chase price right here. And so it pushes up again. And then the people that weren't willing to go long there start to chase price there. So it pushes up again. And the people that weren't willing to go long there start to chase price there. And it pushes up again. And it's great while it's happening because the market's going really far, really fast. And so if you're in that long trade, you feel like the king of the world, right? But the moment it runs out, right? The moment that the next push up doesn't get follow through, guess what happens to all those traders? It doesn't matter whether a trader went long in here, or they went long in here, or they went long in here, or they're going long right now. It doesn't matter. Once that market starts to come down, they're all watching their profits disappear. And so they all want to get out of the trade at the same time. They all want to lock in their profits at the same time. And so you start to get very rapid, very fast moves down. We call that taking the stairs up and the elevator down. And that's what this market is setting itself up for today. Right now, at this moment, it's still climbing the stairs. It's still working. We're still getting FOMO chasing, taking out stops, FOMO chasing. And so it'll go as long as it can go. And I can't predict it when it'll be over. But I can predict that once it's over, the reversal will be fast and it will be fierce. And so if you're one of those long traders, you want to be trailing that stop, or you want to be taking profits and re-entering. You don't want to fall in love with the long side today. That's how you get slapped in the face. With that, I will say goodbye. Thank you all so much for watching. If I missed any of your questions, head to the Discord and ask me in the Futures-Charles tab in the Discord, and I will go back later on this afternoon and I will answer them one-on-one. Unfortunately, I wasn't able to get to all these questions. If you are a member of the Brigade, head on over to the private stream. I'll see you there in about 2 minutes. If you are not a member of the Brigade, why the heck don't you join? It's awesome. It's only $20, and you get to be part of a community of professional traders like DNK, who called us testing the overnight high before the market even freaking opened. All right, guys, have a great day. And if you're a member of the Brigade, I'll see you in 2 minutes. If you're not, I'll see you next Monday. Bye, everyone.